All right, what's up, tycoons? What's up, traders? Super excited for today's video. We got another TLT slash market update. And we're going to go ahead and start off here with our first chart. This is going to be the TLT versus the stock market. Make sure to smash the like button, subscribe to the channel so you guys don't miss out on any of these data and charts that I'm showing you guys. A lot of these charts, you won't see anywhere else really, specifically, even just starting off with this first one. The whole reason I started making TLT videos is because it's been a great leading indicator for the stock market. So we have the S&P 500 futures here in red, we have TLT in blue, and anytime there's been a divergence, which is simply when the S&P is doing something different than TLT, the stock market has followed shortly after. So in this case, we're making higher highs on the stock market. TLT is making lower highs, and you can see eventually the stock market follows TLT and ends up having a huge drop. Same thing happens over here again, and you see the stock market follows, huge drop. And it even works to the opposite side as well. When the stock market is going down, making lower lows, but TLT is going up, making higher lows, you can see that the stock market eventually ends up following. And this has occurred many times over the past year. So what we're looking at was initially we had this point here where the stock market was making higher highs and TLT was making lower highs. And I said, you guys need to be cautious, kind of just be prepared because we could see a big downside move if this plays out again, how it's played out previously in the past. And then even more recently, when the stock market was making lower lows, TLT was making higher lows, and you can see the stock market actually started to rebound after that. This is one of my favorite charts to look at. Patterns don't have to repeat themselves, but until those patterns are broken, they can be very useful. Now, remember, none of this video is financial advice. This is simply just a free video on YouTube, and I'm not a financial advisor, and financial advisors don't give out, financial advice on YouTube. Now, what we have here is TLT on the daily chart, and it's really provided many trading opportunities, guys, for day trades, swing trades. We'll go over a couple of them real quick, but using the MACD has been pretty efficient, so you can use it to spot potential entries and exits. When this red line crosses above the blue line here, that would be considered an entry signal, and you can see that the entry signal fires off in this area, and then we get a nice push up. Over here, it crosses down below the blue line, and that would be considered an exit signal. And you see you have a nice push to the downside, end up bouncing off this trend line here. Then we get a entry signal as well over here. We get another nice push up, exit signal right here, right? Push down, and entry signal right here, push up. Okay, now on top of this, besides the MACD, you can also use the RSI, and you can also use chart patterns. So for instance, here we had a double top, right, indicated by these two arrows. So we had a double top, and then we actually put in a rising wedge. So we had indicated by these two trend lines, that's a bearish pattern. And you can see we got the breakdown, retest, and then push lower. All right, and then we actually put in a double bottom right here. We had a bottom over here. We had bullish divergence on the RSI. That's where we're making a low and then a lower low on the price of the stock, right? So we're heading down. But if you look at the RSI down here at those points, we had a low and then a higher low. So we had bullish divergence. We had a double bottom. And then this candlestick right here is actually a bullish chart pattern known as an abandoned baby. We got into call options here, and we're able to make 80% on our call options, riding that. And then on top of that, we also had the MACD entry signal. So it was really about 4 different signals for a bullish entry here when TLT was right around 98, 99. All right. It was a nice move to the upside. There's been extreme volatility in the bond market due to the banks collapsing. And the reason being is because they're having to liquidate their positions, right? And so they're having to sell their treasuries. And so this is causing, big price fluctuations when they're having to sell billions and hundreds of millions of dollars in treasuries. And that's why you've seen TLT and some of the bond market be just so extremely volatile. Now we have 3 gaps down to fill on TLT. Okay. Heading all the way down to 95. Most likely we're going to fill this gap here soon, right around the 102 area. So stay on the lookout for that. Now we do have one bullish gap up to fill, right at about 111. So, we're currently rejecting that 106.29 resistance area. Above there, we have 109.69. There's going to be another major resistance, and then we have that gap to fill at 111. these gaps, they tend to fill about 90% of the time historically. So the big question is when they're going to fill, right? So, you know, is this gap up going to fill before the gap's down? Or could these gaps down end up filling before we end up seeing the gap fill up here? So pay close attention to those. Things are kind of going left in the market and things are starting to pull back after the recent rallies. If we take a look, TLT has been pretty much just trading in a range here. We have this overhead supply zone and we have this demand zone right here. These are the three gaps down that I mentioned right here. Okay. You know, you can see on my Thinkorswim chart, we have those charted up here as well. And it's really just been range bound. It's been putting in you know, really good signals and you know, these are the Bollinger Bands here. The Bollinger Bands are also very useful. You see, we come up to the top of this range, we start trading at the top outside of our Bollinger Bands, and then we move back down to the bottom. We enter our demand zone of the range, and you can see we're trading outside the bottom Bollinger Bands, and then we start moving back up to the top of the Bollinger Bands. Up here, we barely come outside. We're in our supply zone. We drop back down. We're outside of our Bollinger Bands. Then we recover and go back up. And so, you know, it's been relatively easy, I would say, to trade TLT. And if you take a look, you know, I am trading TLT. I don't trade it every single day, but, you know, I am trading TLT. You can see here, this was a quick day trade, right? And so I got 16% on some call options on TLT in about 20 minutes, right? I got into those at 10:05 and then exited at 10:29. This was the other day. This was a few days ago, actually, back in here, and I was entering into this initial, you know, bounce area that we had right here, this demand zone, okay, in green. And then we had that nice push up. That's this big green candle right here. Went ahead and took some profits. And as you can see, that was a good decision because we ended up coming back down and, you know, hitting this demand zone right here, right around 104 afterwards. Now, if you guys want to join the Discord, the link is in the description. You can use the code Zackley, like the channel name Zackley Trades. You can see, you know, just some of the recent plays that we've been in, right? Day trading some SPY call options, right? Was able to, you know, get 20, 36, and 33% on that play. You know, kind of just closing some as I see fit. Closed half at 20%, closed another half at 36, and then closed the rest fully at 33%. You know, these are some of the TLT calls I was just showing you guys. Now, not every play is a winner. All right. So, you know, I want to be transparent. You know, I had some Apple and QQQ, and Apple didn't work out as well, but I had QQQ calls as a hedge initially. And so really just to help mitigate the losses. I've done the same thing with NVIDIA. I was trying to short NVIDIA, but it was just too early. I think NVIDIA is still overpriced and overbought and due for a pullback, but I was able to have some call options here to really mitigate the losses so that I was only about a 9.7% loss versus a 25% loss. Tycoon Leon is he pretty much runs the show in there. And yesterday he got 80% shorting the market after the FOMC speech. So, you know, that big initial pop that we really had, Leon was in there shorting it. He shorted the Dow Jones Industrial Average and he also shorted SPX. And he was able to sell half of those in about an hour for 80% profit. So really, really good trades there. That's enough about the Discord. Okay, we're going to move into some of the other charts. Now, this is the SPX weekly chart, and this is just something that a possible scenario you guys need to be aware of. All right, we have our Wyckoff method over here. We have the spring breakdown distribution. And if you take a look at our chart, we have spring breakdown distribution, and then we got a rally. That was our throwback right here. You can see we got the throwback and we're in this correction phase right now. Okay, so we're in the phase of correction. You can see we're making these higher highs. Okay, we got topped out here. And if this Wyckoff method is going to play out and we're going to head down into redistribution, that could be a lot of pain in the stock market that people aren't prepared for. We have, you know, basically 3,000 to 3,400 is going to be the range for target for this redistribution. Now, remember, this does not have to play out. This is just a possible scenario that we need to, you know, keep an open mind to, okay, and be prepared for. So that way we're not caught by surprise if we look 6 months from now and the S&P 500 is at 3,600 again, or it's at 3,400, or it's at 3,000. Now, we initially started getting some rallies off of the bullish divergence, which if you remember, I kind of went over that earlier, but take a look how we had lows here, lower lows here, but on our MACD, we had a low, then we had a higher low, and our RSI, we had a low, and then we had a higher low. So as you can see, we're actually testing that trend line right now on the weekly chart, and we started to bounce. But after FOMC yesterday, we started to pull back. We just got the jobs numbers. I believe the jobless claims this morning. That could be something else that brings the market down. We'll just have to see. Okay. But if we end up breaking this bullish divergence trend line, I really wouldn't be surprised ultimately if we come back down to the 3750 area, maybe even 3600 on SPX. So that's something you want to be aware of. And if you look at your MACD on the weekly chart, it's starting to curl down below this blue line. And remember, we went over the MACD. When it curls down, typically that's an exit signal. And then when it curls up, typically that's an entry signal. So it's going to be really interesting to see what happens here on our weekly MACD as well as our weekly RSI. If we break that bullish divergence and we get a sell signal, that could be something that really just fuels this correction phase and possibly sends us back down to retest some of our lows, if not that 3750 region. Now, this is SPX on the daily chart, and we actually have a bump and run pattern, which I've showed this a couple times, but you have your prevailing uptrend, then you have a bump, and then you get the run down, right? So here's the prevailing trend, here's the bump, and you see you come down, you retest this trend line, which is kind of what we're doing right now, coming up to that area. And then, you finish the move down. So it's going to be interesting, right? None of these scenarios have to play out, but these are things that I'm, paying attention to see if they play out. Now, you could also say that this is a head and shoulders forming, right? We have a left shoulder here. We have a head. We have a little bit of a right shoulder forming right here. If you want to draw it out completely, it would look something like this. All right. So lots of bearish chart patterns that you could find. But I don't want to go over just the bearish scenario. Things have been very bullish here recently, and so we will go over some of the bull cases and bullish charts. If you take a look here, the Nasdaq 100 had the best week over the S&P 500 since the global financial crisis, and that's back in this time over here. Now, something I want you guys to be aware of is take a look what happens shortly afterwards. It also has the worst week ever, not too long after that, about 6 months later. So, there is a chance that, after we had this really good week, if history wants to repeat itself, we could see another huge disaster week, in the next 6 months to a year. Now, if we take a look here, this is the Nasdaq, this is QQQ. You see we have a nice breakout here. And then this is the Nasdaq relative to low volatility stocks. Okay, and so growth provides more defense than value and more offense than low volatility. And we can see that where it's actually breaking out to low volatility stocks with the 200-day moving average right here. It's above the 200-day moving average. If we take a look here, this is XLK, very similar to the NASDAQ. This is the technology sector of the S&P 500, also above the 200 MA, breaking through this trend line here. We're getting a break and a retest. So, if things do stay bullish, it wouldn't really surprise me, right? This is really a tricky market where if you're bullish, you can show charts like these and you can show breakouts. And you have a bull case, but if you want to be a bear, you can also take a look at the charts that I have that I've been showing you guys there as well. So it's a tricky market. Okay, just try to navigate as smoothly as you can, and try to be patient. Okay, don't try to FOMO into anything after it's already run up 100%, and don't rush to buy the dip on something just because it fell about 10%, right? Try to use some patience and really pay attention to a lot of the things going on in the market. We have this global financial crisis that we could be repeating. We're starting to see the banks collapse. Now, this is XLK again, right? Looking good. And then this is the 2-year percentage rate of change. And you can see that it was at a really, really low area, right? That it really hasn't seen since about 2010. And it could be starting to put in at a rounded bottom here and start heading back up. So it's going to be interesting to see kind of what happens there. But basically, they're saying that, this is a pretty low area when it comes to the 2-year rate of change percentage on XLK. Now, this is the S&P 500 performance 1 year after the rate hike cycle began. All right. And you can see in March of 88, it was up 13%. In February of 94, it was up 6.8%. In June of 2004, it was up 4%. And in December of 2016, it was up 18.8%. And here we are in March of 2023, 1 year after the rate cycle hike has began, and we are down 9.1%. So we are seeing a little bit of an anomaly here in the market. And that's really because inflation is just super sticky. And then we're also getting these bank crises and these bank runs happening. So we're pretty much living through historic times. If you've been trading ever since or investing since 2020, we had the COVID pandemic, and then now we're fighting with historic inflation. And, we're also dealing with, the fastest pace that the Fed has ever hiked the rates. Now, the discount window borrowing has actually skyrocketed, guys. It's gone completely vertical. Okay. It's at $153 billion pretty much. You can see it's way higher than the previous financial crisis right here, just completely skyrocketing. And this is causing a lot of worry and a lot of fear. When it comes to, speaking of these banks, this is the percentage of domestic deposits that were uninsured as of December 31st, 2022. And take a look here, right? Everybody knows about Silicon Valley Bank and Signature Bank, but look at some of these other really big banks. Okay. Citibank, guys, 77% of deposits were uninsured. Okay, we have JP Morgan Chase, 52%, Fifth Third, 52%, US Bank, Wells Fargo, Goldman Sachs, Bank of America. And this is pretty surprising, right? I don't think that a lot of people would really understand or realize really how much the percentage of domestic deposits that were uninsured across the US, not just in Silicon Valley, not just in Signature, not just in First Republic. I know those have been in the headlines, but it's also across many other banks and institutions. Now, this chart's a little bit hard to see, but this is basically going over inflation, all right? And we're looking at the price increases from January of 2000 through February 2023 for CPI. And basically, what's going on here, what you're seeing, is that the price increases are higher for services than goods. And so essentially, it's all of the services that are really just driving inflation. We have delivery services, hospital services, water and sewage maintenance, pet services, including veterinary. The vet is freaking expensive, dude. Pets are expensive. Pet insurance is expensive. Elementary and high school tuition and fees, college tuition and fees, educational books. There's a whole lot of stuff in here, and it's mostly driven by services. And I think that a big reason for this is because the goods technology is really helping bring the cost down of goods, right? And the advance in technology that we have, but a lot of these services still require humans. So, maybe in the future when AI and, robots, which sounds kind of crazy to be saying, but when those things are more developed, and, really more common use, then that's really when we probably will be seeing a big drop in a lot of these services. And basically the prices of services and the price increases of services start to go down. But for now, that's been one of the really big things that Jerome Powell's been paying attention to, as well as just a lot of other people who are paying attention to inflation. Now, PacWest Bank tapped credit lines after a 20% drop in deposits. PacWest Bank Corp is moving to shore up liquidity to protect itself after customers pulled 20% of their deposits since the start of the year. Remember, I told you guys that whenever you hear a bank is moving to shore up liquidity, what they're doing is selling treasuries a lot of the times. So that's why you're seeing this, extreme volatility in the bond market, and especially things like the 2-year yield and such, is because you have a lot of these banks who are in tough positions. And so they're trying to get liquidity and liquidate their treasury position so that way they can have some cash. Now, the regional bank whose shares have tumbled 58% this month, they secured $1.4 billion from a financing facility from Apollo Global Management-owned investment firm Atlas SP Partners and abandoned a separate push to raise capital because of market volatility, it said in a statement Wednesday. In light of the current volatility in the market and depressed market prices for regional bank stocks, as well as the availability of other options to enhance capital, the company determined it would not be prudent to move forward with the transaction at this time, the Beverly Hills, California-based lender said of its attempt to raise capital. Now, if you look here at the chart, you know, and they talk about their attempts to raise capital. It's going to be really hard to raise capital, guys, when your stock was just at $30 and then it went as low as $5. So it makes it a lot more difficult for them to raise capital. And, you know, that's basically just a sweet way of putting it. And, you know, the nice way of putting it. But really it's because the stock went from 30 to 5. It's rebounded. It's in the like $11 area right now. But you know, there are still bullish scenarios, guys. I showed you guys some of the tech ones. I just dropped a video. This is the thumbnail here recently. If you guys want to watch it on my channel, all right, talking about you know, what billionaires are bullish on, and they're bullish on energy. So it's not just Warren Buffett, it's Goldman Sachs, and it's also BlackRock. Okay, they're buying up a lot of these energy companies, and so I have a couple bullish possible scenarios here. If you take a look, this is XLE/SPY put on one chart. So when you see this go up, that means XLE is outperforming the S&P 500 index. And as it pulls back, it means that the S&P 500 is outperforming XLE, the energy sector. And markets tend to move in 5-wave structures or 3-wave structures. And so I have some bullish 5-wave structures here. Now, you can see recently we came up into the supply zone, which is pretty much just an area of previous demand that turned into a supply imbalance. So we were bouncing previously over here. And then, you know, that demand kind of dried up and we came back into the zone and we're retesting it and started pushing lower, and it turned into a supply zone. We re-entered that area and you can see we did get a drop, but it's really interesting because, you know, typically you know, your corrective waves are going to be essentially 3-wave moves. And so what I mean by that is you have in a 5-wave structure, you have 1, 2, 3, 4, 5. All right, so your wave 2 down should be an ABC correction. Your wave 4 down should be an ABC correction. We've got that both times. And, you know, after our wave 5 up into the supply zone, it seems like we're getting our ABC down. And you know, there is a chance that we could start another 5-wave impulsive move. And if that happens, then we could see, you know, XLE continue to rally relative to the S&P 500 index. Now, remember, okay, the video is not financial advice. I'm not telling you guys to buy into energy just because, you know, Buffett is, or I'm not telling you guys that this chart scenario has to play out. We're just going over some different data sets and, you know, just trying to show you guys some things that are unique. Okay. Now, this is XLE/XLK, which is, you know, energy by the tech sector. And you can see we have a little bit of this cup and handle pattern forming. We have a very clean cup right here. And we've started to get our dip down, that ABC kind of correction that I was telling you guys. And it looks to me like we're putting in a handle right now. Now, this doesn't have to play out. You could say, in fact, that we broke this trend line here, and that, you know, we had a nice little trend line here, and we broke that, and we're potentially starting another downtrend and going to continue moving lower. That's very much a possibility. But for now, you know, I am seeing a nice cup, and we are putting in a handle with this drop down. So it'll be interesting to see if we start to recover in this area and can move back up towards these previous highs and see what's going to happen. Are we going to get a breakout of this cup and handle, or is this thing going to invalidate, and are we just going to continue heading lower? So yeah, that's basically it for today's video. Smash that like button, subscribe to the channel. Remember, if you want to join the Discord, use the link in the description below. We have tons of resources in there. Okay, it's not just for like getting buy and sell alerts. You know, it's a really good trading community full of you know, positive environment. Very helpful, especially to newbies and beginners. Lots of you know, people in there are beginners. And, you know, we have tons of resources and data intel in there. We have AI bots in there as well that are pretty useful. So, you know, check it out. Links in the description. Use code Zachary for a discount on your membership.